John, I was asking earlier about the Wall Street Journal and different other publications writing articles featuring some quotes that you give them from time to time, and they tend to write these on the unusual volume that they see in the marketplace. But it's interesting when they get their information. All the time that they get it, it's pretty much after the fact that something's happened. And of course, reporters being the investigative, and they always want to get the scoop and they want to dig deep. Oftentimes they kind of run into a wall when they call down to the options floor. Can you talk about?
Sure. I mean, as you guys might imagine, the seats trade for upwards of $380,000 in the case of the Chicago Board Option Exchange. Some of the other exchanges trade even higher than that. So the information that the traders see, they think is pretty dang valuable, Preston. And the last thing they really want to do is alert somebody that there's unusual volume in a stock. Sure, the traders want to trade, and traders for the most part, folks, are among the most honest folks that I've ever dealt with. They're fabulous, and their butts are on the line every time they're down there on the floor. It's a tough way to make a living. The men and women that do it successfully are very talented. But do they really want to open up and tell everybody, every reporter that calls down there? Number one, in many cases, the reporters are disrupting their day. They're not real appreciative of that, just like many of us wouldn't be appreciative if all of a sudden a reporter called you. Number two, much of the information that I'm telling you as far as this big block of these options occurred on the bid or on the offer is something that the traders somewhat zealously guard, Preston, because that's information that's not proprietary to them, but why should they do that digging for you? I mean, again, they're not blocking you from getting that information, but they're not going to be terribly liberal giving it out to you because they would like to act on that information too. I mean, the reason the seats trade at the price they do is access, and the fact that they see things that the rest of the world doesn't see. They're not private things as far as insiders, but it might be a tip for a direction in the market, and the last thing they want to do is really give it to somebody for free who's just putting it up in the newspaper or publishing it on the internet. So, I mean, if you hadn't been a trader and hadn't created the systems that we've created to track this unusual volume, chances are you're not going to find it.
It's really interesting. And you've said in some cases in the past that these reporters have been, I don't want to say lied to, but traders have kind of said, hey, we don't see anything going on in here, when they maybe heard of a rumor of a takeover or something. Hey, guys, are you seeing anything here? And sometimes the call comes back and it's, no, we're not seeing anything. Does that happen?
Oh, sure. And again, plus, Preston, on top of all that, there are many firms who don't want their traders talking to the press, period. So it's, again, folks, I'm not trying to give you a bad opinion of the traders, but I am telling you that the firms don't want the liability of their traders on the floor talking to a reporter just for what might be misquoted or missaid. So they don't want that to happen, so they just have a blanket policy, do not speak to the press. And most firms, that is the case. Certainly firms I've been involved with, that's been the case. And that's part of the reason, Preston, that when I got together and created this Inside Options site, we wanted something that would be unique. Not just something where people are touting stocks, but something where we're finding unusual volumes in options and we're trying to find the best stock opportunities we can for people.
John, you're a professional trader. You've been doing this a long time. Can you kind of talk about what you got on right here?
Well, this is the latest from Armani, Preston. I don't know if you recognized it, but yeah, this is, no, basically, folks, traders are distinguished by the color jacket they wear. One color means Merrill Lynch, another color means Charles Schwab, another color means my firm, PTI Securities. Every different color jacket denotes a different clearing firm. And then the traders all have acronyms. In the case of mine, DRJ, or Dr. J, I took that from my father, who is a transplant surgeon, also named John, so he's been known as Dr. J. So you need to have a badge to get on the floor, Preston. You have to either own the seat or lease the seat. Seats, like I say, are about $380,000 to $400,000 right now. If you don't have $380,000 burning a hole in your pocket, you can lease the seat for about $5,000 or $6,000 a month. and the traders on the floor, each and every one of them, there's about, I think, 1,600 traders, maybe 1,800, somewhere in that range on the floor of the CBOE that come down there every day and trade between 8:30 in the morning and either 3:02 for equity options or till 3:15 if they're trading index options.
And so, and the nature of your business down there, is some of this stuff to, I don't know, it's probably changed with computers a lot, but was it a thing in the past where you wanted to maybe get more attention to yourself to fill more orders?
Sure. Yeah. For instance, you've got mesh like this one because it's so hot down there that you want the jacket to be able to breathe. But then you're right. The other part of it, Preston, is as an attention getter. You'd like to have something that stands out so that people recognize you from across the crowd. So when you scream, "Sold!" that people are coming in saying, I heard Dr. J first, I'm trading with him. So anything that makes you stand out, like a bald head and Fu Manchu aren't enough. Whatever it takes is what you need to stand out down there on the floor.
Well, it's real interesting, and you know, it's kind of a short lifespan down there. Isn't the average career still about in the 2-year range?
Yeah, most. I believe they're still putting about 30 or 40 new members a month through. So that means, of course, folks, that multiply that by 12 months, somewhere 350, 400 new traders a year out of those 1,800 or so traders. So, you know, about 25% of the floor is turning over every year. So, yeah, the turnover rate's very high, but there's an awful lot of folks, of course, Preston, that are there and have been there for 20, 30 years, and those are the ones you'd rather be learning from than the guys that are burning out in 6 months or a year.
Right. I mean, it speaks volumes. I mean, just to be in there more than 2 decades like you have. You know, the nature of the business down there on the floor, you're in a transaction business. You make money and you profit by putting orders together. You're not necessarily, if I come in for my computer and I want to buy 10 contracts of an option, and you fill that trade for me, you're not necessarily rooting for me or against me. I think there's a misconception out there where you guys are the bad guys and you know, you only make money by screwing over the people that buy or sell options. You're there to make a market and kind of tell us how.
Well, you just described it perfectly. I mean, what we do as market makers when we're filling that role is we're down on the trading floor and we're trying to buy. Your hands are coming towards you when you're buying, or sell. You can see my palms pushing out. I'm trying to sell. So when I buy or sell, I am almost immediately hedging, folks. I'm hedging, and most of the traders you'll see down on the floor are hedged somewhere between 2 seconds and 30 seconds from the time they make that trade. So they are rooting against you for about 2 to 30 seconds. After that, they're probably on the same side as the market as you are. In other words, if I sell you that 10 contracts you talked about, Preston, if it's a bunch of calls, 10 calls that I just sold you, I'm probably either buying the stock or buying another option. Now, which one of us is bullish after I've got my hedge on? We're both bullish. You're bullish because you're just naked long the calls that you bought on spec. I sold you those calls and covered with another call, or I covered by buying the stock. That's balancing out, and the reason it's not a zero-sum game is I don't have the same margins that you do.
Yeah, that's the other thing. They talk about a zero-sum game all the time, and that's not the case.
No, because I can go out and buy the stock, and as opposed to a customer like many of you, if you're coming in as a pure customer, you have to put up 50% margin. So you buy a $100 stock. You've got to put up $50, and your broker might finance you and put up the other $50. What do I, as a trader, have to put up for that same $100 stock? I have to put up about 25 cents. So in other words, it's just silly the amount of leverage that I can get versus what you have to pay. And because of that, when I sell you an option, I can just grab the stock and I don't have to worry. We're both on the same bullish side once I get hedged. That's why it's not a zero-sum game. If we both had the same margins, Preston, and both paid the same sort of commissions, it would be a zero-sum game. One of us would have to be a winner and a loser on every trade. As it is now, I can be a loser on the options that I sold you and a winner on the stock side, and hopefully if I did it quick enough, I can get myself into a position where I sold on the offer to you when I sold you the options and bought stock at a good price, and made money on my stock trade.
Yeah, I just don't think people realize what really goes on down there. And just over your 23-year career down there on the floor, and some of it's been toward your later years here. You've started Mercury Trading, and I think you moved up off of the floor. I mean, that's pretty hard on the floor.
I'm mainly managing money rather than down there in the pits grinding it out.
But you saw over your time down there, just over and over and over again, like you're saying, these traders paying this big money to have this seat down there, to have this privileged information. Has that happened the whole time you've been an options trader on the floor? Just unusual volume just coming in at a weird time?
Sure. Well, here's a great example, maybe, Preston. September 11th, 2001. Of course, horrible day. The markets didn't even open that day because, as most of us recall, the planes flew into the first tower. The plane, singular, flew into the first tower about an hour before the market was due to open. And then the second plane hit, and of course we did not open for trading. But what happened ahead of those planes flying into the towers is really the story, because back in 2001 there was unusual activity in the put options. And again, folks, call options, that's a bet on the bullish side, in particular if people are buying them. Put options are either a protective device or a bet on the downside. So puts are a lot like insurance. Well, just days ahead of the September 11th attack, Preston, there were very unusual put volumes in American Airlines options, United options, and a number of insurance company stocks. Now, when you look at that and then see what happened September 11th, see that the markets were shut down for the remainder of that week, and we didn't open until the following Monday, at which point United and American, which were like $29, $30 stocks, opened in the low teens, like down around, if memory serves, $13 or so. Somebody made an awful lot of money, $17 on those puts, that they were perhaps buying for $1 or $2, and they're selling out of them for $17. Somebody had insider knowledge, and that's been not just reported by me, but now confirmed by articles. You'll see them on the Chicago Tribune's website, in the Wall Street Journal. You'll see, if you do a little Google searching or something like that, how many different sources have reported that there was unusual volume there, and it signals, or it was tipping the hand of somebody that either the terrorists or the people that supported them knew prior to September 11th that something bad was going to happen.
And there wasn't media attention on that action happening, because I think it happened 3 days before September 11th.
Yeah.
I mean, it comes after. I mean, that happened. It was, it's a tragedy to dwell on and everything, but I mean, it is what it is. I mean, it did happen. I mean, especially pinpointing two airlines.
Yep. Notice how they didn't make the trades in Southwest options or in Delta Airlines options. Only trades, the unusual activity volumes were only in those two. And why would that be? Because obviously if it was somebody speculating on an entire sector, they would have spread the action out in Southwest, in Delta, in Continental Airlines, in Northwest. They only picked the two airlines that they happened to use. I mean, it smacked of the ultimate insider trade, Preston.
Right.
But yeah, this kind of activity where somebody knows something or thinks that they know something, and that manifests itself in the way of unusual option activity, has been happening since I got here in 1981. Somebody always thinks they know something, and in many cases they do. Like I say, I think the hit rate is 70 or 80%. When you see unusual activity, something's going to happen in that stock.
And also leading into, what would maybe even increase those odds for me is, like, take an eBay, for example, where historically they like to surprise and at earnings time, and they have this new guidance that no one's ever heard of before, and the stock just takes off. I mean, if a stock has a history of doing that, you move into another earnings day, they're going to announce the day after, and you start seeing the unusual volume. I mean, that combined with the kind of stock it is, maybe combined with some other factors, maybe you really follow that particular stock. I think it might.
I mean, if people, Preston, can't earn the money that they're paying for the subscription 10 times over, just by what we're seeing during earnings season, something's wrong. Either they're not paying attention or they don't have a broker who's acting properly, because there's enough action in the earnings season that people should be able to, use the information that we provide to make prudent decisions on their side and make some money.
Let me ask you about something that's probably never commented on. Where do you think this falls in the scheme of things? How important do you think it is to have fun? when you're trading or investing?
Hugely.
I mean, you've been doing this a long time.
Yeah.
Obviously, you found it to be fun. When someone quits after 2 years, they're not having fun. They're probably lighter in the wallet.
Yeah, you need to leave your troubles behind, number one, and forget about the losers. As long as you're cutting your losses and letting the winners run as much as you can, Preston, then you're doing what you need to do as far as exercising discipline. And as long as I keep that discipline, we can have as much fun as we want. And it's a fun place. Oh, yeah.
And it's okay to have fun. I mean, it just seems a lot of people just don't seem to have fun anymore with what they're doing. I mean, they're not having fun on diets. They're not having fun on the golf course. But I think it's okay to have a little fun. I mean, I just think in my own personal trading, when things are going real good, it's a fun feeling, and it's okay to have fun out there. I just think it's overlooked.
It is. It's always fun to make money.
Oh, absolutely. Well, I want to say thank you for joining us in watching this video. I think we've covered a lot of questions and answers that members have had while subscribing to the service, and also if you're new, I think these questions are really helpful as far as how to play these updates, John, the different things that you send out during the day, and really why they're so compelling, and why it's really one of a kind service. I've never seen anything like it out there.
Thank you, Preston. I agree. It's been a pleasure. We hope you guys do get an awful lot out of this. And the information that you're going to be getting, again, you're going to get that pre-market commentary along with our stock to watch. Days when there's unusual activity, you will get that report, and you'll get it hours and perhaps even days ahead of when the press is going to be getting comments on these same stocks. You're going to get our trade of the day at the end of the day. Again, that comes out a good 12 hours before the rest of the world gets that. And on top of that, the premium service has some of these option trades as well. So you've really got an awful lot of different ways to play, whether you're a short-term trader, whether you're somebody who wants to position for the long term. The information we've provided on Inside Options should help you make money. And we appreciate the fact that you've taken the time to get a hold of this video, and we certainly hope we've explained what Inside Options is and how it can help you make money.